This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices were little changed on Tuesday as traders assessed rising supply by OPEC Plus against worries of weaker demand and U.S. President Donald Trump's new threats on India over its Russian oil purchases. Brent crude futures dipped 1 cent to $68.75 a barrel by 0631 GMT, while U.S. West Texas Intermediate crude was down 2 cents at $66.28. Both contracts fell by more than 1% in the previous session to settle at their lowest in a week. Both benchmarks have receded because extra capacity from OPEC Plus is acting as a buffer for any shortfalls in Russian supplies, said Priyanka Sakdeva, a senior market analyst at Philip Nova.
U.S. President Donald Trump again threatened on Monday to raise tariffs on goods from India over its Russian oil purchases, while New Delhi called his attack unjustified and vowed to protect its economic interests, deepening the trade rift between the two countries. In a social media post, Trump wrote, "India is not only buying massive amounts of Russian oil, they are then, for much of the oil purchased, selling it on the open market for big profits. They don't care how many people in Ukraine are being killed by the Russian war machine. Because of this, I will be substantially raising the tariff paid by India to the USA," he added.
Moving on to the top news in the energy sector.
Some of Europe's aging coal and gas-fired power plants can look forward to a more high-tech future as big tech players, such as Microsoft and Amazon, seek to repurpose them as data centers, with ready-made access to power and water. Companies such as France's Engie, Germany's RWE, and Italy's Enel are looking to benefit from a surge in AI-driven energy demand by converting old power sites into data centers and securing lucrative long-term power supply deals with their operators. The data center option offers the utilities a way to offset the hefty costs of shutting down aging power plants as well as potentially underwriting future renewable developments.
Asia-US. Sea freight rates are set to drop further in 2025 as shipping capacity outpaces demand and trade routes shift due to tariffs and geopolitical tensions, though vessel rerouting is expected to limit some losses, industry experts said. Average spot rates for containers from Asia to the U.S. West and East coasts have slumped by 58% and 46%, respectively, since June 1 and are expected to fall further, according to shipping analytics firm Zenita. Adding to uncertainty are unresolved trade talks between the U.S. and China. Officials from the world's top two economies last week agreed to seek an extension of their 90-day tariff truce. The China-U.S. trade lane remains one of the most profitable for container ship operators. Next, we have the top news in metal markets. Copper prices rose on Tuesday, supported by a weaker U.S. dollar and supply concerns after the collapse of a mine in top producer Chile. 3-month copper on the London Metal Exchange advanced for a third straight session, up 0.4% at $9,723.50 per metric ton, as of 0701 GMT. The most traded copper contract on the Shanghai Futures Exchange gained 0.5% to 78,580 yuan, $10,935.91 a ton.
Iron ore futures climbed for a third straight session on Tuesday, aided by resilient near-term demand in top consumer China, although expectations of potential steel production control ahead of Beijing's key event capped gains. The most traded September iron ore contract on China's Dalian Commodity Exchange traded 0.38% higher at 792 yuan, $110.33, a metric ton, as of 0200 GMT. The benchmark September iron ore on the Singapore Exchange was 0.3% higher at $101.50 a ton.
We will now look at the top news in the agricultural sector.
Chicago wheat futures fell to a 3-month low on Tuesday, with prices drifting towards their lowest levels since 2020 as Northern Hemisphere harvests pour supply onto the market. Soybean and corn futures also slipped amid high U.S. crop conditions ratings and plentiful South American production. The most active wheat contract on the Chicago Board of Trade, CBOT, was down 0.8% at $5.12 minus 1/2 a bushel, as of 0244 GMT, with CBOT corn falling 0.8% to $4.03 minus 3/4 a bushel and soybeans down 0.4% at $9.90 minus 1/2 a bushel.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.